You only need to realize just how close we are to an absolutely explosive move in the entire cryptocurrency market. And in this video, I'm going to explain exactly where we are at and what is going to happen next. As well as that, I'm going to be talking about which coins I will be holding over the next few weeks and how I'm going to be playing it. Hit the like button and let's get into today's video now, guys. As we look into this Bitcoin chart, I want to bring up something important. I've been talking about this on the channel over the last few weeks, and in fact over the last few months we are basically in a sustained Bitcoin bull market that will run until Bitcoin hits somewhere around $46,000 to $48,000. This is a logarithmic chart for Bitcoin, and I want to show you something. This is 2020, and when we broke beyond this kind of high here, you can see that we ran into a crazy bull run that basically saw Bitcoin heading up around 340% without any real significant pullbacks. Now, what can we expect? Well, as you see what happened before, we ran up into this higher trend on the Bitcoin price, and if we run up into this higher trend here, then we're going to be clearing well beyond $100,000. Now, whether that happens or not, I'm not really here to speculate on, because this could play out over the next few months, maybe even the next few years. But one thing I am speculating on is what really is going on right now in the wider crypto market. Now, one of the most damaging things, if you've not been getting into the market yet because you've been sitting on the sideline waiting for lower prices, is this. The concept of the Bitcoin halving. And now this has been a bit of a damaging one in my opinion, because it's a narrative that's been forced by some big YouTubers out there like Ben Cowan, Gareth Soloway, etc. And this meant that you kind of missed the earlier on moves because everyone was waiting for some mad pullback event to happen before we hit into the halving. Now there's a problem with the halving. First of all, the halving doesn't really control the market, and I'll explain exactly what does control the market because it's one of the biggest fallacies out there. But it's also this. If you were to rely on the narrative of the halving being the thing that controls the Bitcoin pumps, etc., well then even then, you'll realize that as we get towards the next halving, because the rate of rewards, etc., is already shrinking massively, the actual next halving won't really have such a huge impact on the supply coming into the market anyway. Now, the thing that controls the markets, which no one seems to reference, is actually this. It's the liquidity cycle. Now, the liquidity cycle is very important. Effectively, it's this. It's the amount of money that floods into the system based on a variety of different factors. And as you can see, when we hit the lows of the liquidity cycle, eventually we will go into a pump. And you can see it doesn't always hit similar lows, it doesn't always hit similar highs. But whenever we're kind of getting down towards this level, down towards the sort of 10 on the liquidity index, we will ultimately see typically a very big bounce. And we hit this earlier on this year, which was what enabled us to understand that it was pretty much certain almost that we were going to run into a bull market, or at least bottom out in the markets earlier on this year. Now, I know you're not all here for a massive economics lesson. You're not all here to find out exactly why it's pumping. You probably don't care. You just want to know that it is pumping. Fine. But one thing I want to pay attention to is that kind of macro picture, but also the sentiment in the market. The sentiment allows us to make smarter decisions going forward, because if the sentiment is overly bearish or overly bullish, we need to be very cautious. Because of the Wall Street cheat sheet, which I've covered in various videos before, when anything gets too hyped up and too exciting, be a bit cautious, okay? Because it can tend to mean that we might be seeing a bit of a reversal. I don't think, however, looking at the market over the last few days and looking into my free Telegram, link down below, when many people were saying that we were going to get a pullback, etc., as soon as I see that many people think we're going to get a pullback, and I look at it in turn with this chart here, I'm like, yeah, I'm pretty confident we're going to go higher, because unfortunately, when we see a bigger portion of people talking about one thing happening, it tends to go in the other direction. Now then, where are we? What do we need to be doing right now? Well, I want to think about one thing else that's driving this cycle, and it's this. We want to look into the USDT dominance. Whenever USDT dominance is coming down, it means people are moving money out of less risky assets into a more risky asset, such as Bitcoin and other altcoins. As we can see, USDT is starting to drop lower and lower, and yeah, it's running into this kind of buy zone area here, but if it breaks through here, the next buy zone would sit somewhere down at this area at around 3.8%. Once you get to around 3.8% levels, well, things will be definitely ramping up in the markets. Now, I know it might feel like some of the pumps you're getting in various coins that we're looking at right now might be huge. We're seeing really big gains in like Render or Casper or whatever, but I don't think you've seen anything yet. And that's for this very reason. If you look down below, you've got a Bitcoin USDT price chart. And I've just plotted this blue line at the proximate point I think we're at in terms of bull market cycle from now. Whether we get a leg up like this within the next few weeks, I don't know, because yes, many will be like, well, it's very early, we're not expecting that. That's fine. You're not expecting it. That means there's a chance that it can happen. But we could potentially see another one like that, where you don't have that, it just kind of rallies into a bigger bull market and is kind of slower to come. That will ultimately result in a bigger bull market, which maybe we would like to see, rather than the kind of a quicker one like that, which doesn't have time to build up the excitement. But what I want you to focus on is as Bitcoin basically rallied into its first start, coins such as Matic, for example, here had a bit of a kind of sideways action taking place where it was kind of seeing a little bit of upside. And just because the value of Matic at that point was so low, you're probably seeing some more exciting moves going on, or what felt like exciting moves. But following that pump, which came a few weeks after Bitcoin, we saw Matic exploding like 80 to almost 100x over just the space of a few weeks. And that's why I think we've got to be very cautious about where we are right now. Now, if you're subscribed, you've probably seen this before. And if you are subscribed, then you would have been catching all those Bitcoin moves as they happen pretty much every single time. And now what we're seeing is this. Now, it might not seem like this chart is really kind of doing anything for us right now, because yeah, Bitcoin's up, it's been doing well, but there are other coins that have been having an absolute stormer more recently. But Bitcoin is the phase one of the market. And why is that? Actually, right now, although it might not feel like it, we are 100% in phase one of this market. Now, let me just explain myself. At the top, you've got Avalanche. At the bottom, you've got Bitcoin. Why have I chosen Avalanche? Well, Avalanche has had a pretty good year. I think you'll agree, or at least it feels like it's had a good year. But actually, to be honest, it feels like it's had a damn good year because it's had a very good few weeks. But if you look at the bottom, back in sort of February of this year, you'll see that Bitcoin was all the way down 22k, and now Bitcoin is all the way up just at 42k or just under 42k, whereas Avalanche literally was at $21.8 and has literally just returned to where it was. ICP back in February was around $8 and is currently at $4.9. And then you've got other coins such as like Casper, etc., which have kind of just been in an uptrend along with Bitcoin. However, the Bitcoin dominance is continuing to rise while we're seeing kind of the rest of the crypto market rising as well. That's very exciting because eventually this will top out. Where it tops out, who knows, guys? But as you can see on the weekly chart, we're still kind of got this high here, the next high here. It could be potentially the next few kind of weeks, maybe even a month, before Bitcoin even reaches this level if we're seeing Bitcoin price continue to improve. And then I feel that we're going to see something like this occur, and that will be our astronomical altcoin season. Now, if you've been paying attention to the charts at all, you might realize something. On a day where Bitcoin is pumping, you might see the likes of Ethereum having good days. You might see another few bigger cap, large cap coins, Solana, Chainlink, etc. having great days. This is because we're still kind of early on. You might then see that the smaller caps that we've been kind of getting excited about over the last few weeks starting to have really like pretty punchy red days. Now, why might that be? Well, I think that you, like me, are pretty degenerate and we get pretty bored when Bitcoin is going sideways and those other big alts are not really doing a huge amount. So what do? Like any good addict, we go seeking out our next high. So what do? We come out of something safer and more stable. We go chasing those proper degen small cap altcoins. We go following down rabbit holes, jumping onto anything we think we can get into that's going to see crazy pumps. But actually, I think it's coming where we're going to see those large caps making their big moves. Now, what does that mean for us? Well, to be honest, as Bitcoin starts to look to leg up, maybe push towards sort of 47, 48k, to be honest, I think safer bets would be to be in the larger cap coins right now, particularly any larger cap that's seen a good pullback more recently, or at least larger caps that are struggling to catch up with where Bitcoin's been earlier this year. For example, ICP, which I've been talking about quite a few times on this channel, you can see has just broken through this sort of downtrend down here. And then from there, we're anticipating the next move into this area, 48, 50%. Maybe even if it has a good run, you could see 100%, doubling your money down on ICP. And other coins, Gala, you can see has to return back to these levels that did put in earlier on this year, somewhere around 126% to around 175% higher than it has been more recently. HBAR again has a fairly kind of depressing looking chart, has basically broken through this and is sort of stabling out. I think once Bitcoin hits its next level and then plateaus off, then we'll see the large caps. Then we'll see that half the altcoin season really starting to realize itself. So while we've had a good run recently in the sort of small caps like Sidus and whatever else, maybe we want to take a little bit of a backseat, because if Bitcoin continues to rally harder, we kind of want to be in the bigger caps, because they're now getting driven by institutions starting to come in. Smart money have been buying through the sort of summer, etc. Institutions have been chipping away, and now they'll flood into Bitcoin. Bitcoin will rally up. That money flows out of Bitcoin into large caps. That money flows from large caps into the small degen coins. But that's what I see really playing out. Okay, so where we're at right now, that's very important to note. In my opinion, we're going to have a good run up in a bunch of bigger cap altcoins. Okay, you know as well as I do which altcoins you've researched that sound good. You're invested in those altcoins for a reason. So right now you need to have the courage in your conviction to stick with them. And if you suddenly got more cash flow or more money coming in, then maybe that's where you start to look at other coins. But to be honest, jumping ship all the time like this and that is what's going to wreck you, because you're taking your money from the coins that are yet to pump and you're putting it into the coins that have pumped. And this is why it's so dangerous. You probably saw Pangolin having a massive few weeks. You probably jumped across to Pangolin after you finally spotted it, saw it was doing well, and then it's done this on you. Well, the coin that you took the money from, let's say Casper, you took it from back here. During the time Pangolin's been dropping, Casper then goes and does another like 3x or 200%, sorry. And that's what's going wrong. Now you might be like, well, Casper's been pumping. You might take money from something that's yet to pump, like HBAR, put it into Casper, and who knows, Casper has a bit of a quiet time like this for a few weeks, and then you're kind of jumping ship. You have to have the courage to stay in what you've been investing in. Realistically, between 5 and 10 altcoins is all you really need, because any more than that, you're never going to be able to keep note of where they are, pay attention to them. It's way too complicated. But something I'm doing right now is to really start to think about, where's my exit going to be in the next year or 2 years? How much money do I really need to have in my bag? Now, I've realized something that's probably the most dangerous. If I look back at what made me and maybe others within the last bull market not get out in time, is a lack of two things. One, a clear idea of when you're going to get out. So for example, if I was trying to get out because I needed 100k, or I wanted to make 100k starting with whatever I started with, then as soon as I hit my 100k, you better believe I need to get out that market, because so what if it goes up and you could have made 200k or 300k, because you're going to absolutely hate yourself if you don't get out at the right time and you end up with like 1k down the bottom, which absolutely happens. Don't just get bought into this moon buy mentality if it's just going to continue going on forever, because I guarantee at some point it will turn on you and you get absolutely wrecked. The next thing is this: if you're putting too much emphasis on crypto being the thing that solves your issues, and your issues might be, I haven't got enough money to pay for my rent, I haven't got enough money to pay for my mortgage, if only I had this much money I could go and live here, or I could go and do this. I understand that everyone is in different situations right now, and it's easy for some people who've got good cash flow to be happy to exit with like 4 or 5x. And putting all your emphasis on crypto being the thing that's going to take you to the next level is probably one of the more dangerous things in the markets. Why? Because then you are 100% relying on one of these coins having to deliver you what you're asking from it. Here's an example. Let's say I've got $10,000 and I want to make 200k, and I'm like, I put it all into Casper, for example, expecting that Casper is going to go and deliver me my 200k. And if Casper gets to around an 18x, which is damn good returns from now, considering it's been having a really good year, and you're going to be like, well, it's not quite at my 200k, I can't really make the exit right now because I have no other way of making that kind of income. Well, then you're going to find yourself in a pickle, because you're putting all your emphasis on having to have crypto perform for you. And if crypto doesn't get to that level that you need it to get to, then you guess what, guys? Then it's going to come down and you're going to ride it all the way back down. Therefore, I urge you to find another way to increase your income. If you're able to increase your income in one way or another, then you're going to see a much better opportunity. It allows you to take risks more comfortably because you know you've got more income coming in, and also it means that you're not just heavily reliant on the result coming out of the market. Now, here's an important thing as well. As we start to make gains through this market, it's important to take money off the table, because you never know what's around the corner. You never know whether Bitcoin's going to reach 100k. You never know whether right now, in the next 5 minutes, Bitcoin drops to 30k. Probably not, but you know, it can always happen in crypto. And thinking you're rich just because you got loads of money in Render or loads of money in Veracity right now and it's done a 3x, you haven't made any money until you cash that into something else. And this is why I think it's important to have something like Soil in your back burner. Why would that be? Well, because Soil is backed up by real world assets in mining, gold, and various other bits and pieces, which means that even if crypto struggles and goes down, your assets are secured by this. Also, you can earn up to a 14% yield. Why is this important? Well, if I'm pulling money out of crypto markets and they continue to pump, it hurts me less to know that I'm still gaining myself 14% in my USDT stablecoin or whatever it is throughout the year. And that makes that decision so much easier and so much safer, because we need to be comfortable with pulling money out the markets, because otherwise you're just going to leave it in and you're going to ride it all the way up and roll the way down, which is what most people unfortunately end up doing. Now, Soil is a very interesting project. It has a very transparent team available to go and look at here. And you can see that basically what you do is you put cryptocurrencies such as stable coins onto their platform. The Soil protocol will then provide liquidity into the fiat world. The fiat world will go and use it for investing in other stuff like that. This is what traditional banks do anyway. When you put money in a bank, they use your money to go and invest in other bits and pieces, and then you get paid an interest rate, which, despite actually being quite high at the moment, is still very little, because inflation's higher and whatever, you're basically losing money by keeping money in a bank. That will then return yield, because obviously people pay an interest rate in crypto that goes back into the Soil protocol, and then you will earn your interest in Soil token rewards, as well as crypto stablecoins. And by holding various different tokens, you can also earn yield boosters. And by holding the Soil token, you're going to be able to make your biggest gains. That's why I think that something like the Soil token could potentially perform very well as well. And as you can see, Soil only launched a couple of months ago, and it's been having a fairly good time, but after a recent kind of push higher, we're having a little bit of quiet sideways action. It does look like a new project that's going from strength to strength. Now, backing a coin like Soil could be an interesting one, because why would I back a coin like that? Well, as I've just said, if it's a really heavily incentivized hold for people, like it's going to give you much more returns in terms of yield and things like that, then I might be interested in holding it. Because a lot of people are trying to hold it, it could potentially push the price up for it, and that's something that gets me excited. Now, you can see on this yield percentage return, it would actually return 8% in USDC and up to 6% in the Soil token. It's already working with a bunch of huge names within crypto, such as Polygon, Seedify, and various others, and is all coming in with a regulated approach. Now, in the last bull market, we saw the likes of Celsius, BlockFi, and others doing quite well, and then following that bull market, they all struggled because they basically didn't really go with regulation, and they basically over leveraged themselves. They didn't have the money to be able to return it to individuals, and that was where regulation would have been an important part. Now, Soil is the kind of the next generation, the next era of this, basically operating with the required framework. Not only that, the risk mitigation that comes from securing yield in real world assets is extremely important. Why would that be? Well, if I'm holding an asset that's backed up by loads of cryptocurrencies, and all those cryptocurrencies go down in value, that means that those assets and everything can plummet with it. However, if it's backed up by real world assets that are separate from the crypto world, it doesn't really matter where the crypto goes up or down, I'm still going to be able to secure my assets against it, and that's very key. So I 100% recommend that you go and check out Soil, link down below in the description. Go across and check out the charts. If you want to go and buy Soil, it's available on all the major exchanges. If you want to go and purchase Soil, which you can see actually is down 10% today, which is actually pretty good, gives maybe a better entry, along with another number of cryptos. You can see it's available on MEXC, which is linked down below in the description, Uniswap, Gate.io, and a variety of others. Guys, I hope you enjoyed that video today, something slightly different, a bit of an overall message about where we are in the markets and what might be going forward. I will see you tomorrow with another one. Bye-bye.